One thing that has absolutely happened, and again, you're not going to see it even on these reports, and a lot of people talking about it because a lot of people are in the business, they don't want to talk about it. Brokers, syndicators, whatever. Cap rates have risen.
Yeah.
100%. Cap rates have risen. Cap rates have been on a long trend of declining for the last really decade and a half. They've been incredibly low, unsustainable low levels, and that we've talked about this on recent reports. But that cap rate to interest rate spread has inverted, and we haven't really had that invert really ever, especially in some markets. The real big movement, though, is on the kind of the shorter term interest rates, and really that are used to set the interest rates for bridge financing, debt fund financing, those floating rates that could be very, very low, and they were so attractive, and it allowed borrowers to borrow sub 3% with flexible terms that allowed them to really pay up for these assets, even at low cap rates, not producing a lot of cash flow, just because they were going to lock into essentially free money. That party's over.
Yeah.
So now we're back to reality. Things have to pencil. We're back to fundamentals, which is awesome. I think we're going to see some good buying opportunities.
Yeah, but everyone that has properties, they're going to be sad because the cap rates have gone up.
So if you have a property right now, the cap rate goes up. Unless you're trying to sell right now,
yeah, how
much does it matter?
Yeah, I think that's and we were talking about this beforehand. I think that's one of the reasons why people are holding off on talking about cap rate expansion is because there's a whole audience of people that are going to be kind of bummed out if they hear about cap rates rising. Yeah. But on the other hand, like when I hear about that, I hear opportunity. Yeah. It's not like rents have stopped growing. It's not like the actual and I think that people use the word fundamentals to mean a lot of different things. Sure. But if we're talking about money coming in, money going out, there's a lot of money that these properties are still throwing off, and so if it's cap rate expansion time, then maybe it's good for buyers.
No, I think 100% that's the case. I mean, we've already seen the term soften from like just a hardcore seller's market to now relatively balanced. Yeah. The terms are much more reasonable. Again, not many people know or talk about it because there's only so many people that are in the middle of transactions right now or bidding on properties. The terms have gotten a little bit better. It's been really easy. It's been easy the last year or so because it's like prices were going up. Everyone's hitting their strike price or their whisper price, or if not more. There's a lot. There's a lot of volume last year. Everybody did really well. A lot of newer brokers are getting good education right now. I think a lot of individuals, regardless if it's real estate or whatever markets, you're going through an education right now. Yeah. There hasn't been a consecutive 5-week decline in the S&P 500 since like 2007, 2008. Yeah. So we've gone over a decade without this type of continued downward trend. And we've talked about some tech stocks. I mean, some of the high flyers, like especially like millennials are investing in, like the top stock, it's not millennials, Gen Z, the top stocks that Gen Z is investing in, the least the top stocks have declined is like 50%, and like the max is like 90%. Wow. Because it's all like the electric car companies, Peloton, the meme stocks, Tesla. And
I mean, crypto, but it's like all of this. And I don't even think it's probably limited to the stock market. It's just that if you're including crypto, it is this idea of the crazy growth investments that we had, last year. And now, they're going back into value investments.
Well, because you're discounting that cash, the future cash flow at a higher rate, and so they're just worth less. And so people are moving into cash flowing or dividend paying investments, with multifamily being a great option, and that's why it's all relative. But I've been having conversations with people saying this is not a reason. This is the reason why we invest in multifamily to begin with, or because of events like this.
And what's interesting too is, and you talked about cap rates and how everyone's nervous about, because cap rates could move maybe right now this week. They're a little bit higher, but I wonder if we're going to get increased demand from investors fleeing the growth stocks into multifamily that might press them back down.
We don't know, but I think that there's quick bump up in cap rates. I don't think they're going to rise up that high because exactly what you said. the fundamentals are still good. There's still a ton of growth there. People still want to get allocated to real assets, multifamily especially. So there's going to be a floor on the pricing. There is a floor, 100%. And cap rates, I think, are going to continue to decline again. But we got to get through this uncertainty right now.
Yeah.